I love Tony Robbins stuff, and he always says it's not a matter of resources, it's about resourcefulness. And so you have to have that mindset.
All right. Hey guys, this is Julian Castle, and welcome to the Real Estate Investor Group podcast. Today I have a very special guest. His name is Paul from 64 Asset Management. Paul has 800 plus units, and he's going to be chatting with
Don't
us today.
don't shortchange me. No, just kidding.
Yeah, yeah, no. Um, he's very successful, and we're going to be talking about today what he would do if he were to lose it all today. So Paul, thank you for joining us.
Yeah, I appreciate the invite. Looking forward to it.
Yeah. So, Paul, I think this question resonates to a lot of people because given that you have all the experience already, if you were to lose it all suddenly today, what would be your next steps in order to either recreate what you've done, or do something different, in the same space?
Yeah. I so you tipped me off to this question ahead of time, and I think it's a great question, and one that I could probably answer because my background or my career was as a financial advisor, and I sold my financial planning book 4 years ago, and almost five now,
Yeah.
and what year is it? Yeah, 4 years ago, and transitioned into commercial real estate full time, and I think your network is your most important resource. So if I was starting on day one, I would be immediately talking to brokers about what types of assets I'm looking for. And I would also be talking to investors for what types of properties they would like to invest in. Um, like when I want to break down what I do for a living very simply to people is that I'm looking for really good real estate investments, and then I'm trying to match them up with the investors that need that kind of portfolio, that kind of asset in their portfolio. So network would be my primary focus on day one.
That's great. Okay, so coming into the investors, what do you come and say to them?
I think I like to describe what I'm doing and say this is the type of property that I'm looking for, that I'm looking to purchase or that I have experience with, and this is what the investors get out of it. I think I'm trying to help investors get a good return on their investment. I'm trying to help brokers make commissions off the transactions we do. So by helping them get what they want, I'm also achieving, what I want out of a transaction. So, hey, Mr. Investor, we're looking at value add apartment deals in South Florida. You get a 16% annualized rate of return. Is that something that you would like to have? Like, is that something that you would be interested in? They say yes or no. And if they're interested in it, then they go into our sales funnel for, investors, our investor list, that we reach out to when we
Gotcha.
have a deal.
So tell me more about that sales funnel, you would say. What would you set up?
So what works for us is when we have a new investor join our list, they get a series of emails from me, and that's all automated, sharing with them our philosophy and how we approach investing and sort of what they can expect to gain from investing. So that helps tee it up. A lot of times we'll do an intro call, or I'll offer to chat with them if I haven't already. We're at the point now where about a third of our leads come in through internet leads where we don't know those people. So we want to build a relationship with them and make sure that they're a good fit for us and we're a good fit for them,
Mhm.
because otherwise it's not going to be a good experience for either. So it's kind of a get to know you type phase to the relationship. And then when we have deals and we do a deal, our goal is to do a deal a quarter. So usually within the first three months or so of joining the list, they get sent an invitation to a webinar. So when we have a deal, we do an intro webinar to share it with our network of investors and find out who's interested in it or not.
Gotcha. Sounds awesome. And so what when you're looking for an investment, what is the you would say buy box, which is usually like what is the description of it, um, what would you say to a broker, you know, to help?
So where we're at is we're looking for multifamily. We're looking for 80 units or greater, because we feel like we can get good property management at that size. We're looking for some kind of value add component. So we want to buy at one price, spend money on renovating and fixing it up, and then sell at a much higher price. And so we create a lot of value for our investors through that improvement process of renovating units or adding units or whatever um, is going to be part of that deal.
Okay, great. And so tell me, what once you have the investors and the deal put together, you know, what is the next step there?
Well, just depends on how in the weeds you want to get. We have legal involved. We do typically a syndication structure. A real estate syndication is where we're pooling investors together to buy a building.
Mhm.
So we have that step in the process. We have a due diligence period where we're doing our physical inspections at the property and making sure that it is what the seller says it is. And then we're closing on the transaction and we switch into operations or asset management mode where we're executing on our business plan um, and and operating the property.
That's great. So, can you give me a little bit of the what they would call the epiphany? So you were doing something before you got into multifamily. I want to understand what happened inside you that made you want to go after this investment vehicle.
Yeah, I mean, the thing I liked about the financial planning business was that clients were really sticky. Like once you get a client, you make some money each quarter off of their portfolio and but it's not as passive as real estate can be.
Hmm.
And so when we started investing in apartment buildings. I was part of a group that was building apartment buildings in the Midwest where I'm originally from.
Yeah.
And I started looking at how these buildings operate and that there's, a building of a certain scale has property management on site running the building for the owners. And we don't have to get into the weeds on, uh, plumbing problems and pest problems like other people are handling it. I was really hooked. I really see that combined with the leverage that we're able to use in buying a building. We're able to buy multi-million dollar buildings with only 25% down. So it allows us to leverage our dollar to go a lot further than if I was just taking that money and putting it into publicly traded securities like a mutual fund or something.
Hmm. That's
So
great.
for me, it was like a combination of a business that has a passive income component to it and a business that has good investment returns.
That's great. And I want to know, once you saw the opportunity, how'd you get educated on it?
Just podcasts. I joined a mastermind coaching group. Um, you know, Network with others. I mean, I'm always we met through a meetup group that I created in Fort Lauderdale. I have another meetup group in Delray Beach, Florida, and Palm Beach County. So I just like talking shop, I call it, and I think you go to these meetup groups and you learn about successes and challenges that other people are having, and you learn little bits here or there. So there's books out there. There's books that are niche down into like specific parts of this business. If you want to learn about maintenance, if you want to learn about due diligence, if you want to learn about raising capital. So um, that's that's how I'd answer that question. Just learning, investing in yourself, and learning from others.
Gotcha. That's great. And how is it important to be in an environment, like putting yourself in with the people who are doing deals and also putting yourself in a mastermind program, as you mentioned? Does that help you at
There-
all? Or do you think would you
yeah,
have the success were you not part of those?
I don't think I'd be where I was today if I wasn't surrounded with mentors and peers that were driven and successful. I think my opinion on multifamily, especially multifamily education, is that there are books you can read. There's people out there that will teach you sort of the step one, step two of the process. But this really is a business, and even if you want it to be a passive type investment, I think you have to be really focused on what you want, what you're trying to get out of it. And that's what I really gain from the networking and the education groups, the mastermind group, is being surrounded with other people of equal mindset who are going to push me to be better.
Gotcha.
Because if you're going to go all in
Hmm.
on building a multifamily business and operating a portfolio of properties, you have to have the right mindset.
Yeah. Yeah, that's that's true. Yeah, I would say. Um, and could we just, for the person that's like thinking about this opportunity, for example, um, is there a ballpark figure that you would say, like in the past 4 years, since you started this journey in investing in multifamily, that like you would say that you gained a lot more in terms of financial abundance than,
No, I wouldn't say that. I think I would have two comments. One is that um, if you do a big deal, well, and big is all relative, right? But let's say if like let's assume that the person listening to this is newer
yeah,
to this business model. You will do the same amount of work on a $1 million deal that you'll do on a $10 million deal, but you'll have a lot more financial reward on the $10 million deal.
yeah,
Even if in order to do the $10 million deal, you end up with three other partners that you're sharing the deal in, you're still going to be much further ahead. And that's my philosophy, and that's what's worked really well for me, is that I would rather have a bunch of other partners. I would rather be part of a group that, now we have this uh I don't know how to, I lost for words, like brain trust community, right? Like now you've got four people, and you have to know who you're getting into business with, because that's like so important, especially when it comes to conflict resolution. But assuming that you have know these people and you guys have kind of laid out how you're going to work together, um I would rather be in a group of four buying a property where we're all learning and decision making together than buying a smaller deal all on my own.
that makes sense. And when you're looking to partner up with some people, what are some good ways to qualify this person as a partner?
That's a good question. I do have a list that I give out of those, and if I were to draw like a couple from the list, I think the biggest thing is the equivalent of a prenuptial agreement, like understanding how you're going to resolve conflict, what's their personality style, how do they like to fight, and
Oh,
then how do you get out of that agreement? How do you get out of the relationship if it's not working out? It's
yeah,
harder to get out of a business contract than it is to get divorced. So you have to like the people that you're in business with, and you have to have aligned goals. So I think understanding what they want to get out of it, what their roles and responsibilities are, and letting them know what you want, and then defining it. So our operating agreements, we do operating agreements and letters of understanding where the partners all agree, okay, here's, Julian's doing this, Paul's doing that, and this is how the compensation is shared, and just putting that all up front into the document so that there isn't any questions about it later.
got it. Um, that's a great insight there for people to learn. I would think also, how do you raise money? Like it, a lot of people feel like they are not able to go after these big deals or even to partner up with, 3 to 4 people to go on and take on a bigger deal.
Yeah.
What gives them the confidence? Like what would you say would be like the confidence to go get a bigger deal?
Yeah, I do think some of it has to be the mindset of like making your future bigger than your past. So it's okay to start smaller. Um, the other thing I would share is that I really think when people meet you for the first time, they probably I don't know if I should say probably, but uh typically I see people that maybe don't know me, they want to watch a couple deals. You know, they might not invest for a year or two.
Mm-hmm.
So I had someone invest in the last hotel deal we did, and he said, he called me, and the first thing he asked about was a deal from like 18 months ago. How did that deal go? How's it going? And then what about this next deal? And he asked me about every deal that I had been emailing to him, and he had never really shown any interest, but he was watching and observing, you know.
Mm-hmm.
So I think that's it's a numbers game. So identifying who is interested in looking at investment, and then asking the question of them, like, hey Julian, you said you'd be interested in an apartment deal if I had it. Like, how much money would you be comfortable putting into a deal like that? You know, oh, 25K or 250K. Okay. So you pre-qualify people and try to figure out where you're at. And the thing when you're raising capital is that, number one, they have to like the deal. The investor has to like the deal. And then number two, they have to be liquid at that time. So every time we raise capital, we have people say, oh, this is a great deal, but it's just not the right time for me, you
Yeah.
know? Or, oh, I do have some money available, but I don't like, I don't want to invest in Jacksonville. I only want to invest in Miami. So, come back to me with a Miami deal and it'll be a different story. So that's why I think you have to start earlier in building your list of investors. That when you actually have a deal, that's not the time to be going out and trying to figure out investors, who your investors are going to be. And that's my personal experience raising from individuals. I would also say the same applies to like potential co-sponsors, and potential like people, say you're buying a property and you've underwritten it and you want to be the asset manager, but you want to partner with me because you know that I can raise a couple $1 million. And so, finding people, identifying people from your network, from meetups, who are more interested in like that capital raising
Mm-hmm.
role, is important early on too, so that you could start pinging them and saying, hey, I just underwrote a great deal. I'm going to look at it. We're going to need $2.4 million. And I'm looking for a partner that can help like raise that capital for me, and having those conversations up front. So it's all about teeing it up so that when you have something, when you find a deal, you can push the go pedal and bring in the partners or the capital you need to get the deal done.
Gotcha. And I want to, this is a pretty good question, I think. So let's say you're bringing in the money through a capital raiser and you're personally being the asset manager. And there may be someone brought the deal to you or something, or, someone, how is the GP structure? The GP structure is like, how is the organizers of the asset? How would you guys split the profit that is being generated from the raising of the capital?
Yeah. I mean, I kind of have a general idea on it, but I think the real answer is it needs to be negotiated. Like, it
Yeah.
depends, you know.
Let- let-
There's a bunch of different roles and responsibilities, from the initial underwriting to who's posting the at-risk capital, which would be your earnest money deposits,
Mhm.
um, who's signing on the loan, who's doing the asset management, who's raising the capital. And so that's like, say, 5 primary buckets of work.
Yeah.
And typically, the partners are in, say, on the average, 2 to 3 of those buckets.
Mhm.
And then each partner might weight those buckets differently,
Mhm.
depending on the deal and how it goes. And so there's some negotiation that has to occur between the partners to figure out like what's a fair split for everybody.
For sweat equity and plus capital invested.
Yeah, yeah,
Okay, cool. And I want to talk a little bit about mindset because you mentioned this is the most important thing when we met, And so what is the right mindset that you need to have in order to be able to invest into multifamily successfully?
Well, I think it is a business. So if you're just investing as a passive investor, that's a different conversation. But what we're talking about is like it's a business. You're going out to market what you've got. It's like you've got staff, you got I have all these headaches from running a business, and it's not linear, it's not always smooth. And so you have to, I think having the right mindset and like in knowing like where you're going is how you get through those difficult, challenging times. Um, I love Tony Robbins stuff, and he always says it's not a matter of resources, it's about resourcefulness. And so you have to have that mindset that like when, okay, I found a deal, but maybe the bank I want to work with isn't interested in lending anymore on that particular asset class. They told me no. Now the deal, on every time you find a deal, the clock's ticking, right? There's other buyers circling, and you're trying to meet deadlines. And so it's like, now we have to pick up the phone and just start calling. So we've done that before. We have an asset in Wisconsin where we really didn't have any relationships there, so we just started calling every bank in the phone book in that city, saying, hey, we're looking at this asset and we're looking for a lending partner. And I think it would have been easy to say, oh well, that's going to be too difficult to do, so let's go find something easier. And but because we know where we want to be and like where we're going, it's not really quitting isn't an option. It's a matter of like, well, we got to find it. We just haven't found it yet. We got to keep
Yeah,
going. So
we're gonna find the missing piece, right?
yeah, exactly.
That's cool. And tell me, I know that do you currently have any how many deals are you undergoing right now? And then
Underwriting, or you mean actually own?
like own
I own 7 deals right now,
seven deals.
where I'm the sponsor and responsible for asset management. So
Yeah.
there's 7 we're working on.
And do you have any deal that's closing soon or you looking at right now?
Currently we have nothing under contract. We have a couple properties for sale, and we have stuff that we're underwriting. Just on the phone with a broker before this. There's a call for offers on something tomorrow that we're going to submit an offer on, but nothing cooking yet.
Nothing cooking. All right. And so I want to talk a little bit about the system. So let's say if you're really getting into it all in, how many deals should you be underwriting?
Oh, that's a great question. A lot. I would say a lot. We've gotten to the point. I have someone working for me who's my director of acquisitions, and she does the first screening. And then if it gets through the first screening, then she's underwriting it with our underwriting template spreadsheet. And then we're meeting on it if it's passed through her first blush. So in order to do that, we had to learn to underwrite properly, develop our system for that, and then get fast at it so we don't spend hours. I think when you first get started, you could spend a lot of time researching a property, but we're at the point now where we look at a lot of deals, and I don't know if you count those as like fully underwriting or not, but I mean I don't know. I would say we look at like 20 deals a week probably,
Yeah.
where we're like out screening for properties, or brokers are emailing us stuff. And so we're doing some level of digging onto the property before we say, nah, we don't, that's not exactly what we're looking for.
Yeah.
So, and then I would say, oh, I gotta think. I would say that probably only 10% of the offers we don't write a ton of offers. We write offers on stuff that we're willing to buy. Like I'm not out. I don't just. Some people will write an offer on everything and write a lowball offer and just like try and see if there's like a deal to be had somewhere. That's not really our philosophy. We tend to drill into stuff and then say like, hey, if we really want to buy this, like what prices it makes sense. And so I would say about 10% of our offers get accepted.
Hmm.
So um,
Gotcha.
we're not writing an offer a week, for sure. I'd say we so we might underwrite like let's say 20 deals before we write an offer. I don't know.
Okay, 20 to
Yeah.
1 offer. Okay.
Don't hold me to that
Yeah,
math. I'm
yeah.
just like
No,
thinking
don't
off the
worry.
top of my head. It's, anybody will tell you you have to underwrite a lot.
Yeah.
And it changes too, because I would say prior to last summer's interest rate hike, there were just so many buyers. And then last summer, it seemed to me that at least in the area, the sort of niche that we're looking at, that the amount of for sale inventory dropped, and
Mhm.
it's picking back up again now. But it always changes over time. Sometimes it's you have to be faster than other times. So
Gotcha. So let me ask you a question about like what the future holds.
mhm.
Um, we hear that there's a big recession coming. You know, what are your thoughts on that? Do you?
I do not have a crystal ball. I just had a conversation with someone that has a tremendous more units than I do this weekend about it, and there's a lot of fear over how bad the recession could be if it comes. As a that's just by the way, fantastic question. I could do like 2 or 3 podcast episodes just on that topic, because I remember as a financial advisor in 2010 when interest rates were at all-time lows, and everyone was like, they got to go up, rates are going up, and they didn't go up for 10 years, right? Like they just, and every year, and it's like, my philosophy is, let's find good properties to buy, and we're gonna navigate our way through a recession. Like, I'm not gonna sit on the sidelines and say, well, I've got this capital to put to work, but now it's not the right time.
Mhm.
I think I believe that good investors and have to invest in every environment. And I used to live in the Midwest, and I go to Warren Buffett's meeting every year. And I used to hear him talk about how much money he made in the 60s and 70s when taxes were at like 60% of income made. Like he said, he's made money in good times, he's made money in bad times. Maybe he didn't make as much during the bad times, but I think if you find the right deal, it's worth pursuing. Now, if we have a recession, what might happen?
Yeah.
I mean, I don't know, but I think interest rates are going to go lower. They're already lower than they were last summer.
Mhm.
Um, and I think that recessions are good for apartments because less people are moving out of apartments to buy homes. So I think that can help the rental market. Um, if it's really bad, people can lose their jobs and not pay rent. So that's
Mhm.
always a risk too. But I think the big thing right now is I wouldn't be going into a deal at 80% leverage. I would stay more conservative, 65 to 75%, depending on the asset.
Mhm.
Um, we have properties we bought before at 65% loan to value. We could have gotten a lot higher rate of return if we would have leveraged them up more, but we just felt really good about the returns we were getting off the asset with a little lower leverage. And that might be a really good philosophy right now.
Yeah, yeah. That's amazing. Eh, so
By
what
the way, I own hotels, and like people are traveling like crazy, and we're setting sales records every month last summer,
yeah.
every month last summer. And this month more. The We just renovated a hotel in Wisconsin, and we're up 22% over last year with the renovated rooms. And it's just like, I mean, I don't know who but like layoffs and I don't see the recession right now. And
Right.
maybe I shouldn't be saying that where I'm like recorded so we can play the tape back. But it's like, who do you know that's getting laid off? Like, where is the recession?
Yeah, because it's
Um,
like, who is it affecting? Because it's
yeah,
affecting everybody.
yeah, like Amazon had had a bunch of layoffs. Well, they hired more people than anyone during COVID. Like they benefited the most. Um, so I don't know. I don't have a crystal ball. So
Yeah,
we try to be smart about how we're putting deals together, and cognizant of the fact that the lending environment, the rental environment could be different 6 months from now than they are now. But we're not letting fear of a recession change, wholesale how we're investing, you
yeah,
know,
yeah. That's great. And tell me, what should someone do to prepare?
to prepare. Yeah. I mean, when you're putting deals together in particular, just making sure that you raise enough, um,
Money.
what we've been doing is raising more cash than we would typically have for working capital, especially if it's a value add deal, because we've personally experienced inflation hitting our construction budgets. Materials have gotten harder to source, more expensive. So I would, if you're really concerned about the economy and the tenant, your residents' ability to pay the rent, then I would come in with lower leverage, so you have lower loan payments, and I would have, more cash, come in with enough cash in the bank account to pay 12 months of loan payments or something like that. There's ways to put together enough rainy day capital to get through a slowdown in the business.
Yeah.
That the thing that everybody's experienced right now in Florida for sure, and probably across the country in the Southeast, is insurance is just going crazy. And so we just got 100% insurance increase on one of our properties in premium.
Wow.
So that really hits your P&L, when you weren't planning for that. And it's a real problem that a lot of landlords are navigating, that are navigating their way through right now. So if you have capital, if you have operating cash in the bank account to get through those hiccups, I do believe that the insurance crisis, if you want to call it that, is something that will work itself out. But it's going to take a little bit of time, and we don't know exactly how we're going to come out the other side of it, but we know we will, and so we're working through it.
That's great. So tell me, you also are now coaching people how to.
Yes.
So can you tell us a little bit about that? Like, when did you start coaching and why?
Yeah, I found out that I really like talking shop, like I said earlier, and I
Yeah.
really like answering questions and helping people. So like doing interviews like these is fun.
Yeah.
I've had a business coach for years, really helped transform my financial planning business.
Mm.
That person is still my coach, and she really helped me navigate through like how, when I decided to sell that business, was like, okay, I didn't sell it to do this. I sold it. And then I thought, well, now what am I going to do? Like what's next for Paul? So I just know that over time, it's nice to have an accountability partner, someone who can help answer hard questions or help you navigate through it. And through my meetup groups, people always want to have phone calls, ask questions and chat about stuff. And so I started doing consulting with different businesses on marketing operations, and I also coach or mentor investors that are looking to either grow their multifamily portfolio or begin to raise capital from other investors.
Mm. That's great. And so how many students have you so far onboarded onto your coaching program?
Oh, that's a good question. I have 12 active coaching students right now, and there's probably another half dozen or so that I coached for a while and don't anymore. So no one's ever asked me that, but I've helped quite a few people, plus a number of companies and startups with capital formation and business structure systems. So
That's great. That's great.
yeah.
Where can someone find more about that coaching program?
So the coaching is at paulhassebrook.com, and I'm assuming you can link that up in the notes. And then my company's website is 64assetmanagement.com. 64 was my football number. But the company is spelled out SIXFOUR assetmanagement.com. And if you're interested in seeing our deal flow and registering as an investor, you can do that there.
Gotcha. Okay. So tell me a little bit about what someone can expect from going into a multifamily business.
Um, that's a hard question to answer. I think it just depends on your background and what you're looking to achieve. So I've seen a lot of people, personally, I've met a lot of people that started with one or two rentals and said, hey, I like this, I want to scale up.
Hmm.
I believe that I came into it a little bit different because I came in as a capital raiser, but hadn't really done any due diligence on existing buildings. And so I joined a mentorship program where I wanted a coach to help hold my hand on how to underwrite these buildings. And I knew underwriting, but really underwrite for the uh, maintenance, repairs and maintenance of like an older building, like what to look for.
Yeah.
So I had a coach. I had a mentorship program, and then I had a coach that helped me navigate through that first deal.
Yeah.
So
That's great. Could you, I guess a better understanding is what has it done for your life? Um, you know,
well, I really like what I do, and it turns out that I really like to travel.
mhm,
And I've got a lot of family in the Midwest where I'm from, but I've lived in Florida full time for quite a while now. And so uh, when people ask me that question, I think one of the biggest things that I've enjoyed about my current lifestyle is that I can travel a lot.
yeah,
And I have to be on site sometimes, but not all the time. And so that allows me to be in the Midwest. Like I go back to the Midwest. Actually, I'm back in the Midwest for about a week each month. And while I'm there, I might be having phone calls about specific properties in Florida or Georgia, but also working on site on some property in Iowa. And then when I'm back in Florida, I might be working on a property in Iowa or Wisconsin, so that's been a big thing for me is flexibility and schedule. I don't know how many hours I work a week. It's a lot. But I can work on those hours when I want to and fit in travel and family activities in between. And I really enjoy that part.
that's great. Okay. Um, and what is someone, what are your hobbies? Do you have any hobbies that you like? Like,
Yeah, no one's ever asked me that before either, Julian. Um a lot of my hobbies currently, because my girlfriend and I have four kids total together, is like kids activities. So, I don't want to miss that stuff. I don't want to be the dad that like couldn't go to those things. And so I don't miss dance recitals or baseball practice. And so we do a lot of that stuff. I like to work out. Part of the reason I lived in Florida is I like boating in the beach. So I
oh,
like to fit in sneak in visits to the beach. But yeah.
yeah, that's amazing. So I think this is a pretty good point here. Has been a, like have has getting into this business allowed you to spend more time with family, versus like as a regular job, you maybe would be constrained by the 9 to 5 hours and the
Yeah, I
go.
think you can totally start a multifamily business while you have a W-2 job. It
Hmm.
just is you're not gonna most W-2 jobs probably aren't gonna let you fly to Wisconsin for 4 days, right? So I do believe because I was doing this full time, like maybe I've been able to achieve some things that would have been different if I was working a W-2 during the day. But I know a lot of people that work a W-2, and then like I said earlier about having partners and different roles, like you can have a W-2 job and you could still do this one of those five roles. Like you might be a capital raiser, or maybe you're just taking some of your earnings from your W-2 job and helping with due diligence and posting the earnest money deposit. So um yeah, I don't know if that answers your question. I never really was open to doing anything but what I'm doing right now. So that there's a part of what I'm doing now that I feel like I designed it this way. Like this is the way I wanted it to work.
Yeah, because I asked this because some people getting into business for themselves allows them to have more freedom over their schedule.
Hmm.
Since you say that you like to spend time with your friend, with your girlfriend and your kids, then my question is, like, has the path that you have now been allowed you to get and the amount of time that you want from
Yeah, I would imagine so. Yeah.
yeah. Okay, great. Because
Yeah.
I'm sure there's a lot of people who who don't only want to work, right? Also want to have a family life and have hobbies like
Yeah.
you do. So it's kind of like mixing it all together.
Yeah, my philosophy is like no matter what business you start, you really got to give it 5 years of work. 6-4 Asset Management is 4 years old now,
Mm,
and we're really starting to get some good traction in all aspects of the business. During those 5 years, it doesn't mean I couldn't take a vacation, but the ultimate goal for me is that over the next 20 years, as I get closer and closer to retirement, is that the amount of time required for me to be uh, in the office continues to decrease, right? That it becomes like more and more passive over time. Um,
that's a great.
so, but it's if someone close to me needs me to do something, like I don't have to check in with anybody else. I just make it happen, and that's pretty freeing to be able to say, yeah, I could go over here and I can help you with this thing, or
Yeah,
um it's a big perk to me to be able to travel and do the lifestyle I want to do because of this business.
that's amazing. Awesome. So let's look a little bit forward. You say, 20 years from now, do you have a vision for 6-4 Asset Management that you could share?
Well, I do have a vision. I don't know how much I would share of it, because
Whatever
some
you
of
feel
it,
comfortable with.
yeah. We want to keep growing. We want to be the premier investment firm. I think the more success we have, the more the brand, or the 6-4 brand, opens doors. I've noticed in every community that we close a transaction on, it raises our profile, where all of a sudden, like, it's like clockwork. Within a week of closing, we start getting emails and introductions from other brokers in that market, and so that continues to help open doors, especially in commercial real estate. I think that a lot of deals get done off market, and a lot of deals are shown to qualified buyers before they ever get listed. It doesn't mean that you can't find deals that are listed, but I like being the first to see those deals and get first shot at them. So I think that's the bigger vision, is to continue to build out my team and have 6-4 continue to grow in a way that we're known for, treating people the right way and operating great properties, and having fun and making money along the way.
That's amazing. I love it. Great. So, Paul, where can people find you again?
I'm very active online, Instagram, social media, LinkedIn, Instagram, Facebook primarily. I have accounts on other platforms. Like I said earlier, paulhassebrook.com. You could do an inquiry if you want to learn more about coaching and taking your real estate practice to the next level. And if you're interested in passive investment opportunities, 64assetmanagement.com.
That's great. Wonderful. Thank you, Paul. I really enjoyed this, and I'm sure our listeners also very enjoyed this episode. So, thank you so much, and we hope to have you again sometime. That.
Sounds good. Thanks, Julian.
Thank you. Bye.